Investing 24/7. Today we're talking with Jim Martin. He's a lender in our local Pittsburgh area. We're going to be asking him some pretty common questions that I'm sure all of you have either asked your lenders before. I've always wanted to ask them. So, Jim, how long have you been in the lending market?
This is my 25th year.
So how is lending? I mean, everyone thinks the lending market is totally frozen. Is that true?
No, there has been changes in the mortgage market over the last, say, 3-4 years, and it's been, the underwriting requirements have become a little more difficult, but honestly, there's still a lot of loans out there. There's still a lot of people who are qualifying for loans, and we're writing loans every day.
Jim, how do people know if they meet those new underwriting requirements?
It's really simple. Essentially, we're looking at stronger credit these days. By stronger, I'm talking about like a 620 or better credit score. And you should have at least 2 years of employment distance. Doesn't have to be in the same job, but at least 2 years.
Okay, so are there some documents that they can give to you that would make your job easier, like pre-qualifying people?
Certainly. It's real simple. A month's worth of pay stubs, 2 years of W-2s, and a month's worth of bank statements. Those are the primary documents. On top of that, everybody's going to want to see photo IDs. You can't get away with being your next door neighbor anymore.
And once they have all those documents, how quickly can you get back to them?
Generally within the same day.
Okay.
Yeah, it's pretty easy these days. A lot of people are asking how much money do you need for closing and down payments and that sort of thing. There's still a lot of programs out there that require only 3.5% down or even 3% down. So the sales price times 3% is the cash that you need for the down payment. And then you're going to need some closing costs and prepaids. The prepaids are to fund your escrow accounts, to pay your taxes and insurance. So figure $5,000 to $10,000 in that range for closing costs and prepaids.
The question I seem to get a lot is what qualifies in your debt-to-income ratio?
Okay. Good question. A lot of people are trying to figure that one out too. Debt to income is how much debt do you have in relation to the gross income, not your take-home income, but your gross income. So if you're making $36,000 a year, you're making $3,000 a month, times that by roughly 41 to 45%. We look at 45% as being the top end as to how much money can go out on a monthly basis to cover your debts. So you're looking at your credit cards, your student loans, your car loans, any other housing payments that you may have. What you're not looking at is insurance payments, medical bills, utility payments. Those sort of things do not count.
Right, and this ratio has to include the future mortgage payment, right?
That's correct.
Yeah. We've had that happen before, and the new mortgage payment will bump you out of the debt-to-income ratio.
Yeah, that'll make sure you include that housing payment. There are actually two ratios. The first ratio is called the front-end ratio, and that's just the housing payment in relation to your gross income. And then there's a back-end ratio, which is the total of all your debts, including your house, in that ratio. And again, the housing ratio should be no more than 30%. The total ratio should be no more than 45%.
From an investor standpoint, does it matter if they're going to flip the property and sell it pretty quickly, or hold it?
Try.
Or I know. Yeah. Or just hold it for the long term.
When you're talking about investors and their purchase of the properties, the requirements are generally more restrictive because they found that investment properties tend to foreclose faster at a higher rate than owner-occupied. So the underwriting criteria are a little bit more stringent. In other words, there's more down payment required. The debt-to-income ratios, instead of being 45, they should probably be closer to 41, and the credit score should be a little bit higher. Instead of talking about a 620 minimum credit score, you're looking at a 660 credit score. Thank you again for coming to our YouTube channel. I'm Jim Martin with Prime Lending. You can get more information and you can qualify on my website at www.jimmartin.primelending.com. Again, www.jimmartin.primelending.com. Good luck and happy house hunting.
All right, well, thanks for joining us today. If anybody has any more questions that we didn't answer today, please follow us on Twitter. You can ask your questions there, on Facebook and YouTube.